Udayan Mukherjee joining us now, our global business editor. Udayan, what's it going to be this week as we head into a fresh week, lots of action, almost towards the end of earnings. But what are the markets going to really be focusing on now going forward?
I think the top of the heap should be the Paytm listing, Abha, because the subscription numbers were not great. I think it was a little more lukewarm than what everybody would have expected. And the grey market premium is also not very strong with Paytm. And it's such a big IPO. I would say it's a far more influential IPO in a way compared to even Nykaa and Zomato. So I think all eyes will be on Paytm. If it goes off well, the listing, I think the market will take some heart from that in terms of sentiment. If it backfires and it actually loses money for investors, then I think it might dent sentiment quite significantly. So I think the event of the week certainly, of the next few days, certainly is the Paytm listing and how it goes. Otherwise, the market seems quite relaxed. It's holding up around that 18,000 Nifty level very well. There's been no major correction in most indices. There is a little bit of trepidation on the metal side because I think there is a feeling that what's going on in China will probably hurt the commodity cycle a little bit. And you've seen names like Tata Steel, JSW Steel, Hindalco actually cool off quite a bit from their recent peaks. So there are elements in the market which seem to be exhibiting some nervousness. But I think that the near-term direction of the market will find resolution on the day of the Paytm listing.
All right, that's really what to watch out for this week, and do stay tuned. We have our conversation with our market guru.
Joining us today as market expert is Nirmal Jain, founder and chairman of the IIFL group. Nirmal's not only the head of and the founder of one of India's largest non-banking finance groups, but he's also a pioneer of sorts in the equity research business, having been at it for almost 30 years now. Nirmal, it's good to see you on the show, as always.
Thank you, Udayan. Good to see you.
And I want to begin by asking you about what everybody's talking about now, which is basically these large digital IPOs which are happening. Paytm, Nykaa. Well, Nykaa's listing was great. Paytm subscription numbers were a little lukewarm. Do you sense that it is possible that one of these big IPO listings, big billing IPO listings, might actually not end up creating money for shareholders, and that could dent sentiment? I mean, it has happened in the past when some of these big IPOs actually backfire a bit. Is that risk present in the market today with the way the Paytm subscriptions went?
No, the risk is there for sure, but when and how this will happen is very difficult to forecast. So today, if you really look at it, then there are foreign investors who are putting money on these kind of IPOs. So if you see, they've been selling stocks like maybe HDFC and Kotak banks and buying into these kind of IPOs. And if you look at their mindset, then what has happened in the last 10 years, they made an enormous amount of money in these kind of stocks in China. So whether it's Tencent or Alibaba, when they invested, it obviously looked horrendous in terms of valuations, with no justification by traditional yardsticks. But these investors, some of the large foreign funds, they invested and they made money, and they made a lot of money. And now, as we know that China is slowing down, also there are lots of things that are not going right there for investors, and they are looking that probably India in next decade will repeat the story. So what they are betting on is a strong growth momentum to continue, and a monopolistic or a duopolistic kind of position that some of these companies have will basically help them make enormous amount of money. But jury is out, is very difficult to say. And I know, in fact, historically, we know the Reliance Power IPO had come, and that basically turned the market. Whether something similar will happen or not is very difficult to say. And even if it happens, it's very difficult to say it will happen in 1 month, 2 months, 2 years, or 3 years. But all of us know that these kind of valuations for these many stocks cannot sustain forever.
I want your perspective specifically, Nirmal, on the Paytm particularly, without commenting specifically on the name, because you have the unique advantage of not just being a pioneer in equity research, but running an NBFC yourself. And we were speaking to Sanjeev Bajaj the other day, and he said, these guys will struggle to make money because there's only so much money you can make in distribution. They don't manufacture any of these products. Do you subscribe to that line of thinking? And do you think the market is overestimating the potential of some of these fintechs?
Okay, let's not talk about Paytm, but the payment companies. So all the payment companies, if you or payment focused, technology companies, if you look at their prospectus, if you look at the investor pitch, all of them basically, plan to make money by lending because they know that there's not much money in payment. So payment will be loss-making proposition, but they think that they will have transaction data. They'll have rich, verified transaction payment data of the customers, which they can leverage and probably make money by lending. Now, that is where the question is that lending, at least the way we understand, as we have been doing this for more than 1.5 decades, is a long learning curve business. It's not something where you can create something in the lab and just roll it out in the market. So again, it depends on how the, historically what has happened, Udayan, is very difficult to do any crystal ball gauging in this because there are many companies that raise money, the market remains benign, they raise more money, which allows them to learn, which allows them to invest in the market or learn by mistakes as well as, keep growing. So, today you can't take a call, but I also share the sentiment that it's not easy to make this kind of money in lending, which justifies large valuations. But then lending is one part of it. I mean, they are basically, many of these companies are planning to get into all financial services, segments. And in many of these segments we compete. So I don't want to sound on a public forum as if I'm biased, but obviously it's a very competitive world. And to incumbent players like us, we have competition from a variety of new players, and we have to be, we have to be watchful. Yeah, we have to be.
But let's forget about fintechs or payment companies. Let's forget about fintechs for a moment. Let's take the bias out of the equation. You just said something very interesting, which is that people are selling, foreign investors are selling HDFC Bank and Kotaks and are buying into the Nykas and Paytms. What would you do as an investor? Because you've seen many cycles. Does this seem like a prudent strategy to you? Would you sell some of these blue chips, traditional blue chips, and get into the digital unicorns if you had money to run now?
I won't do that, Udayan, because I know that maybe I'm a little traditional in terms of mindset, so I won't do that. So what happens that you always will have a fear of missing out and being left out. What you can do is that put about 10% of your money, of your equity allocation into these kind of stocks and just forget about it. But if you ask me that whether I'm going to sell my blue chip and buy these stocks significantly in my portfolio, answer is no. And even for me, probably I have a little larger risk appetite, and that's why I'm saying 10% of my equity portfolio. But most of our clients, we won't even advise that much. But there are a number of traders and speculators who want to play on a momentum or on a swing trades or a day trading. They trade in these kind of stocks. So that's flavor of the season, and you just can't, you can't basically go against it too much.